Traders, welcome to the TMT Stock Market Strategy video for Wednesday, June 29th. We had a big gap up and really just went sideways pretty much most of the day. As for the day trader, it's very difficult when you gap down hard or you gap up to the upside really hard. And I mean by you're going to gap up, that's going to be pretty much most of the move. And I'll show that to you on a 5-minute chart. And then we just went sideways pretty much all day. And the last minute, last half hour or so, we had a short cover rally. And now we're following through this morning, which is nice to see, because we don't want to short into deep sell-offs. We don't want that. We want to sell into resistance. And I'm going to show you some levels, what I'm looking at. There's a couple of scenarios here that would be to play out. Now, let me show that to you when we get into the indexes. But let's go into a few things what I'm looking at. All right, so we had our sell signal in the VIX and our buy signal in the markets. That was here when we closed up out of the band. We closed back in. I said, watch out below 23. And as soon as you gap below 23, we had a sell-off pretty much all day in the VIX. And that was the sell-off for the VIX, a buy signal for equities. It's actually a very good, reliable indicator. It really gives you good buy and sell signals in the market. So keep following this. Now, what am I looking for here, though? Well, I believe that at certain levels that we should see selling come back into the markets. Now, we do have a couple of different scenarios. The one scenario would be to play out markets a rally up to a 50 or 68% fib retracement, and then sellers come back in and we sell off. Right now we sell off into certain areas. But what I am going to show you is two scenarios that are going to play out with some levels that, if they do play out, this is what to look for. Okay. All right. Now, here's the VIX. Stocks above the 50-day moving average. I'm looking for washouts, right? I'm looking for extremes. And I mentioned this to you in a video that we're close, right? So anything really below 20-ish, 20%, usually what happens, you get the rally that comes back up again, right? Here, we had it here, and then we rallied. Here, and we rallied. Now, we didn't get there quite, but we're down about 22-ish in the stocks above 50-day moving average. And then we rallied back up to plus 35%. So we're not there yet. So that means that the next sell-off could get us down to like 5 or 10-ish. That's what I'm looking for. So not quite yet that we've washed out in a lot of these indicators. So technically, my trading model is still on a sell signal. All right. Now let's take a look at the Mcclellan Oscillator. Same here. Mcclellan Oscillator tells me that we're down here 80, 90. That's a good washout, as you can see here. Okay. Yeah, we did say I was looking for some sort of a short-coming rally down, 800, 900 points in a Dow in 2 big days, very big down days that you are going to look for some sort of a bounce. And some of the indicators were rolling back to the upside, where we would see some sort of a bounce play. Now, we're still in it today. Markets are still up about 14 handles in the ES in the pre-market session. So let's see if we get followed through today, or do they sell into it. That's going to be the caveat. All right, now what I want to show you is really important, guys. This is extremely important. Here is the 30-year bond. This trend line, and I just blew it up, is 20 years in the making and has not broken out. Okay, why is this important? Well, because we broke out this week, right? We tried here the last couple of weeks and we closed right at it. We broke out. This is yesterday's print. Okay. What I believe is that, and if technical analysis is telling me which is correct, if we stay above here for the next week, this week and next week, I believe that the bonds will start and continue to rally. Yields will continue to drop, which will put pressure on the banks, okay, banks and financials and insurance companies, life insurers, as well as some of the technology names. I think that money will roll out of equities and go into bonds and these safe haven trades that have been happening. Gold, the dollar. You cannot rule out the dollar. And if the dollar starts to rally and really take out some key resistance areas, that's going to put pressure on U.S. equities as well. Okay, so this is what I'm watching closely for the next couple of weeks. I would definitely figure out whatever you have there, whether it be the ZB or the USB, whatever feed you have, pay attention to. It's very important. All right, so here's the VIX. The VXX, which is the ones we like to trade, had a bunch of emails saying that they made some good money on some of this analysis work that I put out. Great, I'm happy, thank God, love it. Next is going to be here. What's the next step? Any deep pushes lower into this area of support, 12.60 to even $14. If we can get a little bit lower, fill this little gap area here, and get into this area here, I would look to start nibbling into a long trade in a VXX. I do believe that the markets, and I mentioned for the last 2 months, the bigger move is to the downside, and we did get it, and I think it's not even close to being over. Okay, here's the 5-minute chart, and as you can see, as a day trader, you pop up, and what happens? Nothing. There's absolutely nothing going on up until the end of the day where we had the little short covering rally. So this is what I'm saying. The high probability trade is gone when you have these gap ups and or gap downs for the day trader. Okay. All right. So now let's go into the daily chart, and let me point out 2 scenarios. All right. So as you can see here, here's that head and shoulders that we did take out for 2 days. I left it here because I do believe that we literally popped up one day and we started to roll over the second. So I kept this. The downside target would still be 196. All right. So what happened? Let me blow this up for you guys. All right. So what happened is that we literally only back testing. We filled the one gap here, and I put filtrations from high to low. So here's the one gap fill, and we got this huge gap area here, which anywhere in here is going to be the target where I believe the markets would stop and start to roll over again. Now, the 38% comes in right here, which is underneath the 200-day, 203.86 in the spiders. Here is the 50%, and here's a 61.8%. Any one of these three, I believe, if we could pop back up, then I think we'd rally into the 206 or into the 207.22 area. Definitely write them down. Now, what I mean by getting these areas to short, if price gets to that area, we need a trigger, right? So you need to follow your trading plan on what is your trigger. Okay, I have a plan in place that when the markets do get up to that area, I'm going to look for an objective short. Okay, now, what happens if, what would negate this pattern? Okay, we always want to understand that too, because believe it or not, we all know the markets are made to fool the masses. So what happens if the market does get up to the 50 and blow up to the 61.8% and then rally higher? Well, if we take out 208 on a closing basis, then I believe, and I know it sounds crazy, but the markets are truly made to fool the masses, will start another leg to at least challenge these highs. We do have an election year, so you have to understand that. So it's very important that they're going to do whatever they can, they meaning the government, whatever conspiracy theorist you are, what the plunge protection team, the Fed, they're going to do whatever it takes to hold this market up, okay? They put trillions of dollars into this market. I don't believe the market's going to crash. I will say that you can get into correction mode, absolutely. But be careful here, okay? But I'm looking for a nice short into this area. And what do I mean by that? I'm looking to short the market. I'd be looking to buy VIX. And at one point in time, if gold starts to sell off a little bit and get us back into the 12-ish area, I look to start buying gold, okay? That's going to be the trading plan when and if the market continues to rally. Now, the market could just stop here today at 200 and roll back out. Now, if the market takes out the low here at 198.70, all bets are off for any type of challenge in the highs, and we're in correction mode. And that means that by far, selling rallies aggressively would be the trade. Okay, so remember that. That's really important. All right. So next, and I want to show you this because it's going to be a long video, but we fill the one gap, and this is where I'm saying right up in this here that 207 will come in at the 61.8% retracement. That's a logical area where I would like to see that objective short when we have a lot of supply up in here. Okay. Next is going to be the 30-minute. I just want to show you that energy starting to build again. We have the Bollinger Band starting to contract, all right, which I like. We need to get a little bit more tighter, and then I think we're going to have a big move one way or the other. Again, it doesn't tell you what direction, but I want to show you energy is continuing to build. Transports, the leader of our indices, hit our objective M-top formation target of 127.17. That was hit, okay. Where we go from here, if we lose this area, we will definitely challenge these highs here at 114. Let's call it 115. And I shouldn't say definitely, but I could say that at high probability we would probably catch that 115, that low here. Okay, so nice trade in the transports. Diamonds, we caught this move at 171. Let's call it. Next area here. These are the three big support areas on the daily chart. Okay. IWM, you could see we just back tested this area that was support, now resistance. All right, so let's look for a continued move into these areas. This is one of the better shorts, would be the Russell 2000, because when risk off happens, the risk off play, the higher risk indexes such as the IWM, the Russell 2000, will get hammered. And as you can see, it really didn't do anything at all for the last 2 years. So this is an area here that we rallied so hard for 8-9 days. Now selling off, you could see we took it all back in 3 days. So a loss of the low of 108.31. Look out below. We're moving lower. And lastly is going to be the Qs. Same thing. All right, we just tagged that area of support that is now resistance. So anywhere in this gap fill area here, if we continue to move higher on a closing basis, I'll get some targets for the Qs. All right, guys, I know it's a longer video. I apologize, but I wanted to get my point across of what I'm seeing in my technical analysis overview. Have a great day. Be safe. We'll talk to you tomorrow.